Hello, good morning everyone, and welcome to this morning session. As usual, we're just going to go through our trading plan, and just a reminder also that the main aim of this 2 weeks live trading session is just to see the 3 M's in play, just seeing us applying the 3 M's in a practical way over 3 weeks. I always say if you speak to a million traders, you get a million different ways to trade. So it's always a reminder, I'm not saying this is the only way you can trade, as in, pivot point strategy is not the only strategy. There's so many different ways you can trade. But the key is just to make sure you have some sort of a plan, you maintain some discipline, you apply good money management, and you're consistent. And that's the aim or the keys to success. Okay, so just going through my own plan, we'll start off by looking at the economic calendar. And again, the main market we're looking at is the Euro US dollar. So I'll just bring the economic calendar up. So today is Tuesday, the 20th of February. Again, always make sure you're using the correct time for your time zone. So today is Tuesday, the 20th of February. So let's see what's coming out that could affect the euro or the US dollar. So we can see there at 11 o'clock this morning. Again, don't forget, these are all GMT plus 1 times. So at 11 o'clock GMT plus 1, we have both the Euro-German survey expectations and the Eurozone economic sentiment reports. They're both coming out at 11 o'clock this morning. And let's see what's coming out after that. So then no more reports of high importance due out after that. So the last report of high importance today relevant to the market we're trading, the Euro-US dollar, is at 11 o'clock. Eurozone economic sentiment and Euro-German survey expectations. And as we know, the markets tend to trend sideways prior to the last report of high importance. Again, we don't use the words always or never when it comes to trading or the financial markets in general. So we're not saying the market always trends sideways prior to the last report of importance. What we're saying that it tends to. That 7 out of 10 times the market will trend sideways prior to the last report of high importance. And maybe sometimes 3 out of 10 times it might trend before the report. But you don't base your decisions as a trader on what rarely happens. You base your decisions on what usually happens. And usually the market trends sideways prior to the last report of high importance. So due to that, we will not be trading prior to that report. So we'll keep out of the market. A webinar invitation will be sent out to you all shortly after this session. We'll meet 10 minutes before that report. So we'll meet at 10 to 11 GMT plus 1. Obviously, for those in the UK, trying to say UK is an hour behind. So UK is GMT plus 0. But anyway, you work out the times. We'll meet 10 minutes before that report. So a webinar invitation will be sent out to you all. Do check your spam emails, because sometimes these invitations or even the webinar recordings can go to your spam emails. So do check your spam emails. So we'll leave the market alone till then, but let's just have a look at the charts, see what the chart looks like. Okay. Again, that's the other advantage of following one market. You can always follow the trend of that market. So remember yesterday when we met, yesterday evening, we drew these white lines to mark out the sideways trend for the Euro-US dollar. So those 2 white lines were drawn last night. And you can see the market is still trending sideways between these 2 white lines. You can see the first resistance is within that sideways trend. The pivot point is within that sideways trend. But you can see the first support is just outside the sideways trend. So at the moment, first resistance and the pivot point are within the sideways trend, and the first support is outside. So that's potentially the only entry point we have at the moment. Obviously, when we meet at 10 to 11 or 10 minutes before the report, when we meet, things could have changed by then. So we'll reassess then and see. And also to mention is that we'll only be having one attempt at the market today, because in view of tomorrow, because tomorrow, Wednesday, we have the US Federal Open Market Committee meeting minutes coming out tomorrow evening at 8 p.m. GMT +1. So this is a report of enormous importance that would affect all markets, because it's the minutes of the meeting that they had when they decided the US interest rate decision. So this is a report of enormous importance, and most people in the markets will be waiting for the outcome of this minutes of this meeting. So there's a likelihood the market could trend sideways all day today and tomorrow up until the report tomorrow evening. So in view of that and in light of that, we're trading today, we need to be careful. We will not be having 3 attempts at the market today because of what's coming out tomorrow. So we'll only be having 1 attempt at the market today. And again, that's another tip or another point to raise regarding trading, because when you're trading, you want to get all the information together, and then you then decide to do based on all the information at your disposal. So you get all the information at disposal, see what's happening in the economic climate, what's happening in the financial market, what reports are coming out, and then you base your decision based on the information you have at hand. So that's another point to raise. So for today, we're just going to have 1 attempt. But like I said, for now, we're not going to place any pending orders. We're just going to wait till 10 to report. From a swing trading point of view, we'll go to the 1-day chart. So we'll go to the 1-day chart. So I use the 1-day time frame for the daily time frame for my swing trading, and I use the moving average 50. So we can see that the market is currently trending up. So you can see the Euro US dollar is trending up nicely. You can see the moving average, make it slightly bigger. So you can see the moving average going up nicely. So at the moment the market is trending up. This is the daily time frame, so each candlestick represents 1 day. So the only opportunity I have now to swing trade will be to sell if the market changes direction. So if it changes direction, meaning that the market then falls and breaks the moving average, then I'll then have a potential swing trade. So what I'll do is just keep putting my order just below the moving average and altering every day, which we'll do together. So starting today, so let's start with today. So if I just put the cursor over today's candlestick, and the moving average today is 1.2223. So I'll just place my pending sell order 2 pips below that at 1.2221. So 2221. So let's do that. So Euro US dollar, sell. Obviously you decide whether you want to use 50 cents per pip or $1 per pip, because you'll be risking about 100 pips. So 2221, oops, 2221. So we're just going to be selling just below the moving average in case it has a dramatic drop today and breaks the moving average. Then my pending order will be in place. So 1.2221, stop loss of 100 pips, and that's it. You leave the limit blank and just submit. So that's all I need to do from my swing trading point of view, and then I'll reassess again tomorrow morning. So from a swing trading point of view, that's as straightforward as it can get. So every day, and again, we'll do that together over the next 2 weeks. I'll just see what the moving average is and keep moving my pending order till the market falls, breaks the moving average, and takes my order. And then once I'm in the trade, I will then start moving my stop loss with the moving average. But we'll just be checking that on a daily basis every morning. Okay, any questions? If you have any questions, do click the hand button on your control panel or send your questions or comments through the question box.